Hey everybody, it's Brian Shannon from AlphaTrends.net. Today's Friday, the 1st of November, and today we had a little bit of a bounce back. For the week, we're basically lower, except for the biotechs, which gained a little bit of ground, and the cryptos had a strong week as well. So let's take a look at these charts and make some sense of it. Starting with the S&P 500, let's actually start here. People like this look because it is a very simple way of seeing where we are in relation to the 5-day moving average. That's what that color shading is. When we're below the 5-day moving average and the market, the 5-day moving average is declining, we're color shaded red, and that's where we are for the S&P 500 here, for the NASDAQ 100, the semiconductors, and the Russell 2000. Now, you can look at this and say, hey, I made money on the bounce today, and that's great. I'm always talking from a swing trade perspective. What are the odds? The odds aren't for a quick turnaround when we're below a declining 5-day moving average. So look at the time frame, and as long as we're below the declining 5-day moving average, making new purchases for a swing trade generally don't make sense. And while I have TradingView open, let's take a quick look at crypto because I often forget to look at it if I don't go back. On the left is the daily chart, and you can see we're seeing some pullback in here. This market had a strong week, as we know. This prior band of resistance held as support. Now this prior band of resistance is looking like it wants to hold as support. I had mentioned numerous times on Twitter that I was looking to sell some up into this 73,000 area because that was the measured move of this. And I did sell some up in there, and I'm looking to buy some probably near this anchor. So that is the anchor off of the September low right here. I'm sorry, that's the October low. So somewhere under 68,000. And today we got a little bit of a bounce, but that bounce was rejected right at the anchor off of this recent peak, which tells me it becomes more likely that we do in fact pull back down under that 67,000 level. Solana is also pulling back a little bit, and as we know, we've been talking about this inverted head and shoulders pattern in here. Now we're seeing we had a test of that neckline, and now we are making hopefully a higher low once again at the anchor off of the low that we saw this month, so October that is. So we've seen that buyers have come in this general area the last few times. In fact, I purchased a little bit there just today, and I'm looking for it to rally. I don't know if I'm going to hold this portion or if I'm going to trade it, but that's the way I look at those cryptos right now. They're still in primary uptrends, like the S&P 500 is in a primary uptrend. Now, we broke below the rising 20-day moving average, and we broke below this important level right here. We had seen previous resistance, turned support, and now today back to resistance after breaking below that level yesterday. That's not what you want to see. Now, from a positive perspective, we're holding above the September anchor, that's the purple line, and the rising 50-day moving average. I'm not convinced we're going to continue to hold in here. You can see that this is the 2-day anchor, so from yesterday's gap lower, the average S&P 500 buyer is losing money. We know that because the average price was right up in here. The average short seller is making money. So next week, I think you've got to look at this market still with a lot of caution. You have to look at what we have going on. We've got the Federal Reserve next week, and we've still got a lot of earnings. So as much as I talk about the markets in here, I'm more interested in the action in the individual names, and there's going to be some great movement up and down in both of those. In fact, this weekend, I'm going to go over for Twitter subscribers and Alpha Trend subscribers. By the way, that Twitter subscription is just $10 a month, and you get this analysis every single day. What I'm going to do this weekend is go through some of the earnings surprises that we've seen so far and the positive reactions to try to identify fundamentally sound companies that have the chance of being able to continue to move higher over the next several weeks and months. So look for that if you are a subscriber. If not, maybe consider taking a look for $10 a month. The S&P, though, you've got to be cautious in here. Longer term, we're still in a primary uptrend. We've got a rising 50-day moving average. Below the 20-day moving average gives us a little caution, and especially below the declining 5-day moving average, we look at these bounces, and maybe you're going to day trade them, but you don't expect them to follow through and reverse, and that's exactly what we saw as it did fail. We closed a little bit higher, but Still, it's a failed move higher because we were at below the volume weighted average price from the gap lower. Now, the NASDAQ has been a little bit stronger, as we know, and continues to be because we closed right on that anchor. So, showing more indecision, but near term, it's guilty till proven innocent below declining 5-day moving average. Longer term daily time frame, we're holding above the anchor from the September low here as well, and that 50-day moving average. If these levels fail, so for instance, going back to the S&P, let's say we chop around in here like this, well, then it's quite possible we're going to get back down to the August 4th, was it the August 5th drop? It was August 5th. So the anchor from the August 5th low. And that would bring us down to 560. I don't want to be holding S&P 500 if it's going to, do that. And I don't want to buy early because what if we do drop down to that anchor in the NASDAQ and get us down to 475? That's 12 points lower. To me, that's a terrible investment, terrible trade to do that. So strong caution going into early next week, and be aware that you're going to have the stocks like Apple that report earnings that get hit hard, and then you're going to have stocks like Amazon that rallied strongly today, but they certainly didn't make it easy for investors or traders in Amazon this week. We saw that big gap up, an island reversal lower, and then an island reversal higher. So a lot of choppy volatility in there in Amazon, and with a stock like this, you've got to let it shake out a little bit and figure out what it wants to do before you can get aggressively building a position in it. The Russell 2000 continues to be really a mess. There were a number of things that really went well with this stock this week. That is, it gapped above the 5-day moving average and gave us a perfect entry as it got back above the daily volume weighted average price. And then we sold a third up here to reduce our risk, or I'm sorry, we sold a third to reduce our risk here, sold another third here, and then we're stopped out of the balance. So it was a profitable trade only because of some strong risk management techniques that I teach people. And that's why it was a profitable trade. Otherwise, if you're holding this, it continues to be a disaster. It's just, look at the personality of this. And if that suits your personality, then go ahead and get involved in it. It doesn't suit mine, so I'm going to let this Russell 2000 shake out a little bit and see if maybe it can trade a little bit with a little bit more sanity before I decide to get involved. Semiconductors, we broke an important little band of support in here, and that's with this on the daily time frame, and here you can see on the 30-minute time frame. So we're below the declining 5-day moving average. There's no reason to be a buyer. Just because we're at the 50-day moving average does not mean it's a buy. Just because we're at the anchor from the September low doesn't mean it's a buy. It seems highly likely that we at least test the anchor from the August low, and who knows, perhaps we're going to head down to the 200-day moving average and even the year-to-date anchor before this little bout of profit taking is over. We're still clearly in a giant uptrend from the beginning of the year, but to see these gains digested a little bit wouldn't come as a surprise to me at all. AMD reported this week, disaster there. So you've got to look at it and say, where are the best odds? Are your best odds with fresh money to be a buyer of the semiconductors? And I say no, definitely not. Not while we're below declining 5-day moving average. What would change my mind about that would be if it were to do something like this, is that if it quickly got back above this level and then did something like this, then we might look at this and say that was a failed move lower that sucked in short sellers. And if the market rallied back up here and got back above the 5-day moving average, then the semiconductors might be able to save the day in here. But right now, with all this indecision, I'm not going to try to be the hero who goes in and says, yes, that's the point to buy, because what if it continues down and does head towards that 200-day moving average? To me, that potential of downside is not worth the unlikely chance that this is a shakeout. I say it's unlikely because we're below a declining 5-day moving average. And while we're below a declining 5-day moving average, the intermediate term trend is considered guilty until proven innocent. Biotechs have been quite choppy in here. We see these rallies that fail quickly, and they've been rallying into this zone in here. So if you're looking to get involved in the biotech stocks, one, the 50-day moving average is declining. That's that blue line, and should be declining all next week unless we get above these levels in here, because that's where we were 50 days ago. So I think that, the best thing for these is to kind of continue to go sideways all next week. Then that 50-day moving average can flatten out. And then as we get rid of this data, the 20-day moving average comes up through it. So maybe then it could be a better upside potential, or maybe mid next week it does something like this. And then at this point, if it was to do something like this, well, then I will, of course, update people who subscribe and get these videos every single day and let them know, hey, we're going to be a buyer here with half of our stop under here, half our stop under there. But for right now, it's too early to look to be a buyer in here. There's too much uncertainty. There's too much volatility. The personality of this biotech group doesn't make sense to me in terms of making new purchases, so I'm going to stay away. Financials are on the brink of maybe losing some important support that would lead to perhaps a little bit deeper pullback down towards that 50-day moving average, maybe down towards the anchor from the August low. So just be aware of that if you trade those stocks. Energy names continue to be a disaster. They're below a declining 20-day moving average. They're below a declining 5-day moving average, and all these other moving averages. Just because there's things going on in the Gulf doesn't mean it's going to really, mean that oil suddenly turns around. The trend is lower here for oil itself and for energy names. So I'm continuing to say just stay away from them.